Hey guys, welcome back to the channel. So, been a long time, but I'm back. Rebranded the channel. Wasn't feeling Coins Monster as much anymore, you know? So, I don't know, I'm still in between two names. Alright, so let me know in the comment section below how you prefer Trading Guru or Trading Mafia. Alright, pick either one of those two and just let me know in the comment section. The most votes will be put on the channel name. Alright, so a lot has happened. Okay, ridiculous amount of things have happened in the past couple of weeks and months. Okay, so we're gonna take a closer look. Okay, let me just put in the zoom a little bit. Alright, now first things first, I am not totally convinced the bottom is in for Bitcoin. Okay, I'm going to show you why, but I'm not convinced the bottom is in. And I think we bottom out by either Q1 or mid next year. Okay, it's going to be a very slow and painful time in the market. We might get some bounce here and there. I'm not totally bearish on Bitcoin, nor I'm going to say it's going to zero, because it's not going to zero. But I just wanted to share something with you that I've spent a lot of time thinking and analyzing on the charts. Okay, so bear with me. This is going to be a strong analysis. Okay, alright, so let us get back to technicals. Now I'm going to mention a few reasons why I'm not convinced the bottom is in, and what do I see in the upcoming months. Okay, by the way guys, go ahead and watch my videos. Okay, I've released 2 videos, especially the ones on this moving averages, which kind of gives you the entries and exit signals, entries on buys, or even entries on shorting the market. Okay, it's absolutely wonderful, it's brilliant, it's terrific. Alright, and I back tested it to the times when I sold the coins at almost the very top, and it turned out to be great. Okay, so it actually works. Alright, I gave an example of VRA, so do watch that. Alright, so let's get back into the analysis. Okay, so on the screen we got a Bitcoin chart on the weekly. Okay, first things is the elite wave theory. Okay, I'm gonna go and just point this out. This is wave 1, wave 2, wave 3, wave 4, and wave 5. Okay, now this is what I see on the charts. Now there's a lot of theories circulating as to the regression bands of Bitcoin and God knows what else. Bitcoin is bottomed, it's never gone this below, and whatever. Okay, fair enough. Now what I do see is the 5-wave theory, and every time there's a 5-wave theory, okay, 4 and 5, which by the way 4 doesn't go below the height of wave 1. Okay, so basically guys, what this means is we have an ABC correction after that. Okay, so we have an A which breaks the height of wave 3, goes back and comes back down for an ABC correction. But the thing is, inside this wave C, now we got a multiples of wave 5. So we got 1, 2, 3, 4, and 5. Okay, and then inside this A to B wave, we got an A, B, and a C correction to the upside, which takes out the height of wave 2. Okay, and then it comes back down, but again it does the 5-wave thingy. Okay, now it doesn't necessarily mean it's gonna, wave 5 doesn't necessarily have to be lower and steeper than wave 3. Okay, but if you go on to Google and just search, okay, it's what concerns me most in terms of time speaking is this. It's kind of forming the rounded top. Okay, so unless this rounded top sort of comes down like this, it's not going to break up. Okay, now let me delete this for a second. And I'll put this on the monthly chart so it's easier and clearer to see and understand why I came up with a 5 wave 3. Okay, because see, generally wave 3, it's a lot bigger than any other wave. It's the most impulsive one, and this is the wave 5. But if you remember correctly, we had a fake top in 2013 which ended up going in 2017 to an all-time high, okay, of 20k. So that's where we were. This is, we did not get we got a fake high cycle top here at about 1100, okay, and then we went up. So that's why it's wave 3, and which is the most impulsive wave. And now wave 5 is sort of acting like a deviation. Okay, it's acting like a deviation, which means it broke the high of 20k. Now it's coming back down. Now I do not know where this thing is going to come down to. Okay, so we got the actual top of Bitcoin was not 69k, it was actually 64. 69k was just a deviation, just to get the retail excited and into the market. Okay, that's what's really happening. That's why we got this entire top. Okay, so got the wave 1, back rally to 48k, huge rejections. Now we're currently seeing a wave 3, which I think is around about 13 to something k. 14 could be even the one. It goes back to 23, 24k, and then I see a wave 5, which is going to bring this thing back down to about 8 to 9k. So I think Bitcoin's bottom is sitting between 8 and 9k. Okay, it's very hard. I'm not gonna lie, it's ridiculously hard to predict. Okay, but why I'm thinking this is entirely possible is because something else is happening that has never happened before. Okay, so we broke this moving average. Well, we held this moving average every time in the bear market, but this time the 50-week moving average, we just broke it, and we closed the monthly. So the 50-week moving average on the monthly chart has been broken for a couple of months now, which is with heavy rejections. Okay, so I think Bitcoin ranges anything between 13 and 20k. Okay, don't know exact bottom, nobody knows, but I think it ranges. It gives a deviation back to 24 and then comes back down again to about 9k. Okay, now the indicators are bottoming. Okay, ridiculously bottoming. This is why I think we can get a nice little rally up. Okay, now I'm gonna remove two of these indicators for a minute, and I'm just gonna focus on the MFI. Now this indicator, I'll be launching a video on it pretty soon. It's a brilliant indicator. Okay, and I just want you to focus on something here first. Okay, take a look at this right here. Okay, so this is Bitcoin on the monthly chart, and in 2018 December, when it bottomed, the MFI was actually crossing as well. Okay, so it took into 3 months for it to print a reversal and catch a rally in 2019. Okay, now that happened in December, so I'm thinking we again go back down now, just a little bit more, 13 to 14k. Okay, or we don't go down, we just hold the 15 to 16k range for a couple of months. It's going to be entirely boring. Okay, so basically we repeat this level, okay, and then go up. But the thing is, I think we're going to see this action again, a massive breakdown, just like we saw in 2019 and 2020. Okay, the COVID crash. Okay, which will be the wave 4 to wave 5. Now bear in mind that these monthly closes were above the 50-week moving average. Okay, this one isn't. All of these candles, they close above the 50-week moving average on the monthly chart. This is ridiculous. This time we have all these candles, 1, 2, 3, 4, the 4-month candle now. It's closing, well, we still have about 10 days, 12 days to go, but it's close, still looking like it wants to close below it. Okay, now for it to close above it, it actually has to pull a 45% move. Okay, it's ridiculous. One candle move needs to be 45%, and if that happens, that's a huge move, which means it's gonna get rejected again either way. So I think what's really gonna happen is that we bottom out for a couple of weeks more, okay, and Bitcoin just ranges for a couple of months, and then mid next year we get a rally up, okay, and then by May 2024 we get another bottom, okay, which can easily be a double bottom. I mean, I'm not saying Bitcoin is gonna definitely go to 8K. It just means that if it plays out this structure, there's a likely chance that we get a really good double bottom. 50-week moving average and the 20-week moving average will come down and then eventually cross. Okay, they will hold. And then what we see is this beautiful range like we saw in 2015, 2014, 2015. This is going to be the structure. Okay, but I think currently it's actually playing out just like 2018, which is, that's why I'm not entirely bullish, and it's not easy to confirm anything yet because it's a mixture of both. Okay, now I don't know if you recall one of my videos that I made a long time back. Okay, a long time back. Now I did say that Bitcoin, what it was actually doing is playing out one massive super cycle. Okay, it was playing just a one massive super cycle. I can't remember where this was from, but hey, there we go. Okay, that's it. Okay, see, now this fractal points out the exact bottom of the bear market in 2015, which is even down to the fractal wicks. Okay, the top is here, and the next top is here, and the final top is here, which is the blow off top. Now this is, people are saying we didn't get a blow off top. We actually did get a blow off top. It's just on a bigger scale time wise. Okay, and if you go by this theory, look, this is the bottom, right? It actually marked the bottom here along with the top, and then it marked the bottom. The fractal is marking the bottom, which is sitting around 10K, 10,500, around about there somewhere. Okay, so I think this is what happens. It hits below, it gets the liquidity, and then it deviates. This will be a deviation, sort of, and then it goes above and it fights anything between 16 and 22K for a couple of months before it actually makes a massive move. It will give Bitcoin's moving averages time on a monthly chart to curl up. Okay, if we go back on the weekly, okay, look, the weekly is still below resistance. Okay, so even if it does push up right here, 18,324, I mean, it has to close above it and hold for a week or two. I think it's actually going up on the weekly time frame to test the moving average. Okay, but it's difficult right now. There's bullish divergence, I must admit. It's on the weekly time frame, so it's going to be pretty strong, but like I said, 18,300 to top of this range, top of this trend line, the falling wedge, the pennant, which is this looks like a reversal pattern to me. Okay, target is 19K, round about there. Okay, then we see what happens. If it gets rejected by the 20-week moving average again, it's going to be a painful time. Okay, so if you're looking to accumulate Bitcoin, I think you're good for the next 6 months, I think, at least. Okay, it's like there, and God knows what, maybe even just one more deviation, get back into the range, and then go up to get the liquidity. Okay, but honestly speaking, I don't see Bitcoin going back to 50K anytime soon, at least not for the next couple of months. Okay, it's a lot to take in. I mean, Bitcoin can easily hit 24K as well if it's being pumped enough. Okay, which would also make the dominance rise. Okay, and just come back down again just to retest. I mean, this can easily be a pattern too. Okay, right now sitting at the bottom, it's forming a nice double bottom, bullish divergence. Okay, but the thing is, it's making lower highs every time. Okay, so we have lower high, lower high, lower high, lower high, lower high. This needs to be a higher high, and even if it gets the higher high, let's see where it bottoms. That's your entry point, and it's a perfect entry point. Don't go for the small chicken move right here. Okay, it's too risky, and I think there's, if you look at the order books and the order maps, there's millions and millions of liquidations happening right now because they're getting retail traders. So I don't know, it's too hard. It's too damn hard to predict the bottom of Bitcoin. Now you see people putting God knows how many charts, what indicators they're using. We're comparing it to 2018 cycle, but the fact is you cannot compare it to 2018 cycle. Okay, you cannot compare it to 2018 cycle because you can, but should not be using that one alone. Okay, why? Let me show you. Okay, so back in 2018, first we had a massive rally. Okay, which was this, before it actually went down and crashed. Okay, let's hide the moving averages for a minute. I'm going to use a fractal, which is this one. Okay, look, it's clear as day. Okay, it is absolutely clear as day. It's making lower highs every time. Right? So that's what happened in 2018. So we had a high here, then it crashed back down, and then it crashed back down, and then lower high again before it eventually capitulated. Now notice this little portion. Okay? So it broke down the range with volume, which is this candle right here, which is bearish engulfing. Okay? And now it's making this pattern. So maybe this goes up to back test the 18.2K and then come back down in the range. So the bottom can easily be at 13 or 10K. Okay, maybe even on a quick wick, and just play out this fractal. So that's why I'm saying you cannot just go by the fact that it's gonna make it's gonna be just like 2018. It's not just like 2018. Okay. It's just not like 2018, because there will be, if I use the fractal here, there's going to be massive similarities in there. Look, right here, I'll show you. If anything, this pattern looks definitely more like the 2015. Okay, why? Look at this. Bam, there we go. Okay, so this is the top, double bottom, goes up, crashes back down, again, deviation to the upside, and then crash back. Okay, so there we are right now. That's if this fractal were to play out exactly, which we're not sure it's doing. But like I said, guys, remember, let it go up, break the lower high, and make a higher high, and then come back down to make a higher low. That's your perfect entry point for accumulation. That would be absolutely brilliant. Just perfect. Spot on entry, and then you let it go. That's why it's hard. I mean, it's a totally different fractal. Okay, it's a totally different fractal. Now, I'm going to show you the Fibonacci's. Okay, because what concerns me is that you see all these red candles. On the monthly, we had no red candles here in the bull market. Okay, in 2018, we at least had a couple. We had here, we had here, we had here, we had here. It was at least 4 times we retested. Okay, this time 1, 2, 3, 4, 5, 6 candles. We printed 6 green candles, which means 6 months it was nothing but money printing. There is immense inefficiency in this little range right here, which is why Bitcoin has been coming down. Okay, now the actual support, the real support on candle body closes on 2018 is sitting at 13.7k. Okay, so let's, realistically speaking, this is a good chance that can happen. It can play a combination. Okay, so for the better part of 2021 and 2022, this downtrend has been very similar to this 2018 fractal. I think it's playing a combination of both. Okay, so this monthly candle could actually be the bottom, whether it's 13.6, okay, or 13.6, or it's going to be 15. Nobody knows. But let's see how this closes. And if it closes with at least for 2 weeks above this support, it's going to be good. Then we can think about just making a nice trade on Bitcoin. Okay, but besides that, I think this is my best bet. Okay. Okay, now focus on this Elliott wave thingy. Okay, so we had the initial drop, which was wave 1, wave 2, wave 3, and we're currently in wave 4, which has started to drop in wave 5. Okay. Now in between these waves, like I told you, there's multiple waves. Okay, so I think we're might just do an ABC. Okay, so this is wave A. We go back up to the height of wave 4B, and then we come back down to double bottom on wave C. Now see, it doesn't necessarily mean, like I said before, 5 doesn't necessarily have to be lower than wave 3. It can be the same, just over an extended period of time. Okay, so be watchful of that, but I think the best area to trade would be just to wait and get a confirmation on double bottom on the monthly chart or the weekly chart, because it is bottoming. Okay, it is bottoming, and when this thing turns to the upside, we will get a confirmation candle, this indicator, the MFI. Okay, see, just like what happened in 2018, we got the blow, we turned back up for a month, came back down to retest on a candle close, and we got our higher low. That was the double bottom. So if we get anything like that over here, okay, and then we get a double bottom here, it's go time. And then we'll take it step by step, see where the targets are. Okay, but I think that's what's happening in Bitcoin. Okay, now we're going to analyze the total market cap. It's basically just doing the same thing as Bitcoin. Okay, it's massive liquidity and efficiency in trading, and it's sitting around about 406 billion to 510 billion. That's the range it needs to tap. Why? 1, 2, 3, 4, 5, 6 monthly green candles. That's why. Okay, that's inefficiency. So it's going to be tricky. Now people are saying altcoins, let's accumulate altcoins, there in the bear market. Okay, here's the thing about altcoins though. Total 3, excluding Bitcoin and Ethereum, sorry. 85 billion to 160 billion. That's the free range that is still pending. Okay, Now that move down is actually pretty big if you don't see it now. 50% roundabout. Okay. Of course, that depends. That depends on where you get it from. So we'll just have to be patient and see. Okay. Because on the weekly chart, everything is forming bullish divergence. Everything. And they're making a pattern to sort of get a bounce, which can be considered as a bear market rally. Okay. I am hoping for a bounce, but we need to close above. We need to get back in the range of 345 billion and close the weekly above it, so we can see a rally for 45% from there on. Okay, that is going to be the best thing to do. Trade to take profits then, because there's clear resistances. Okay, lots of inconsistencies. See, for example, that multiple green candles and then one red candle. That's inefficient trading. Alright, that's where the liquidity in the market is. So currently we are seeing bullish divergence. Okay, and what I like about the most is the fact that it has already sort of broken out. Okay, but it failed to close above it. So if we see the weekly close above 345 billion, I'm pretty sure the MFI is going to print a buy signal. Okay, it's going to be around there somewhere, and it's going to close above it, and then we can see a rally up, just like all these other bear market rallies. Okay, so we just have to be patient, and that's the thing about altcoins. Okay, it's not easy. It's not easy because the Fibonacci's, they're putting a target to way below. Okay, way below hand. Now we still have a little bit more to go to the main key levels. 14%, 23%, and 35%. These are the drops that can happen. Okay. Now if we get a rally up and we get rejected, the drop is going to be about 40%, which is what typically happens in bear markets. Okay, which is what typically happens in the bear markets. See, 49%. That was in 2018. In 2017, 45% as well. And then after the rally in 2019, we had another 45%. I'm not counting the COVID thing because, well, it was just a basic back test. But after bear market rallies, this is what happens. Okay, so that's what we gotta wait on. And that's the update on the market. Now, the S&P was something that I've been watching very closely. Okay, because the S&P is looking sort of bullish, but only up to make a fake out and make another lower high, because I don't think it has the strength to make an all-time high. I really don't. Okay, I really don't. It's a nice double bottom, but it doesn't have the strength to keep going into an all-time high. It will come back down. Now, like the Elliott waves, it's making a massive ABC correction. Okay, it's making an absolute massive ABC correction. And like I said before, waves and waves. So we got 5 waves, then ABC correction, 5 waves, ABC corrections, ABC correction again, and then picking up 1, 2, 3, 4, 5 waves to the upside, and then come back down for an ABC, which we'll see, because all these little zones, they're gaps that this thing, the S&P, has left on the daily and the 3-day chart. Okay. So that's where I'm looking for S&P to come down to before catching another move and may make a bearish retest. We'll have to see. We'll have to see. Now, the dollar has broken down massively. Okay, but key thing is it's still on a parabola though. Okay, still on a parabola. Okay, still setting previous, well, above the previous zones, and indicators are low on the daily chart. Okay. Now this is a rising wedge. It broke to the downside. I think most likely confirmation is the illiquidity that we have in this area right here. Two massive red candles. I think it's gonna go and back do a test of the moving averages on the daily time frame and then come back down again, see if it holds, which I highly doubt it will because it's breaking key structure. Okay, but it's still on the parabola though. On the weekly, it's still on the parabola. Okay, it doesn't look like it, but it is, because we got one touch here, we got the second touch here, and then we finally got the third touch. But usually when during this third touch, what happens is we go back up only to make a lower high and get rejected from this bearish pattern that it broke down from. Okay, descending channel, broke down, go back up, do a bearish retest to 107, 109, and then crash back. It's going to be range bound for some time now. Okay, so let's see what happens here, but it does look like it wants to come back down after a small range. Okay, but it needs, what it's failing to do, it's the classic distribution pattern. Okay, it's failing to do a classic distribution pattern. So we'll see what happens with that, but that's my take on the market. For the next couple of weeks, we'll see how this plays out. If dollar does get to 107, 109 range and gets rejected, it's going to be a huge relief, at least for the crypto market, and we'll see what happens with the other markets as well. Okay, now gold has also been going up, which has prevented for Bitcoin cryptocurrencies to do a massive move. Okay, let's see how this thing closes on the weekly time frame. And stay tuned, guys, because for the next couple of years I have a massive trade, and this could actually be for a few years. Okay, but I'm talking about a 50 or 100x trades for the upcoming 5 to 10 year cycles. Okay, so stay tuned for that, and just watch for the markets. Don't rush to trade unless you have an absolute certainty. Okay, because what they're aiming to just kind of liquidate you and just take your money. And with all these candles that are going through, I'm pretty sure some bullish news has to come out. Okay, just to make the market stable, all right, before they actually go and they put us in despair. Now this is what I wanted to talk to you about, and this is what I learned doing some research earlier this afternoon actually. Okay, now here we have the psychology of a market cycle, right? Now people say we've been capitulated. Okay, great. What about the despair though? You know, I think we're past the capitulation stage. We're halfway down here, which is where most of these altcoins are back to their all-time highs, or just above their all-time highs. Sorry, not all-time highs, right before they made a breakup. Okay, for the massive bull cycle, and now they're back into their initial price range. So theta, for example, broke out from $1 and went all the way up to 16, right? Now it's back down to $1. I think it can actually go lower. And by the way, I'm going to release a few videos on price predictions, but I think we have this mini rally to go through, another wave down. It doesn't have to be lower than its initial price, okay? It just means it can go back to, now if you go back to a couple of charts, like a couple of stocks, okay? Okay, now let's see a couple of stocks. Twilio, for example. And look at this. It's exactly where it was back in 2017, 2018. Who would have thought Twilio is ever going to come down to there? Okay? So that's what most of these altcoins are doing. Alright? That's what these things are doing. Look, it broke out right from here, 77 something cents, 90 cents, is back to 90. Okay? It's back to 90. Alright, now look here. Downtrend, okay. Capitulation, great. Rally, okay, great. COVID threw it down to despair. Okay, so maybe we get another rally up just to make a lower high again, or maybe get a fake out, which is a deviation, and then come back down. Okay, but we come back down to its 2020 something lows, right? Now about 27 cents. Because you gotta keep in mind that most of these altcoins, actually, the bull run started when the COVID hit. Okay, right here, 41,000%, guys, 42,000% from its wick low to wick top. Jesus. Okay, it's a massive parabola, and using even the Fibonacci's, let's just say, okay, November 20th, right before the alt season started. Okay, they do a 1-to-1 ratio of correction. Okay, they do a 1-to-1 ratio of correction, which means 56 cents is definitely on the cards, because that's where this range was. Okay, it's just tapping the range. Maybe it has another deviation, it comes back down only to the 60s, maybe just the 70s, and then it goes back up again. So you never know. Okay, but I think we're there pretty soon. We're bottoming. Okay, pretty soon we are going to bottom. Okay, in my opinion, I think it can easily get to about 50s and 60s later. But let's see if this pattern actually confirms an inverse head and shoulders on the weekly, which is what I'm seeing on all these altcoins. Okay, Jesus, where is the head and shoulders? Oh, there we go. It's going to be sort of slanted. Okay, so I think maybe it comes down for deviation one more time, it completes that inverse head and shoulders, and then goes. Okay, just, it's hard to tell. It's really hard to tell where these things are going to come down to. Okay, because some things are pointing that, okay, they've broken out from the downtrend, now they're retesting the lows. So it's actually could be in for a nice little rally, but only up to the 50-week moving average. Okay, which is still not bad, not bad at all. I mean, just to get the liquidity, you know, right here at about $2, where it started to break down, it's 120%, around about there somewhere. You just take profits along the way. Okay, it's not going to move anytime soon. Okay, it's going to get rejected about that 50 moving average, guaranteed, unless it makes a range with a higher low. Now, the best trades and the best time, longer term swings, they're the best. They can generate more profits. Okay, but here's the thing: you need first a higher high here, higher low here, higher high here, and then a higher low here. Okay, your entries, perfect entries are these ones with a higher low. Okay, so if you get in here now, and if it does push up to about $2 or 160s, you take profits and then you wait, be patient. Okay, and see if it makes another high, and then you be coming back down and be patient again. Okay, so let's see what this thing does. Okay, if this is the bottom, if this is definitely the bottom. I think for the time being, yeah, about $2 is your target. Okay, so stuff like that. Just keep looking. Just keep looking and waiting. And this might not be the best time to get in for hold. Okay, but it might be the best time to think about what you want to buy and hold in the upcoming months. Because if we don't get the bottom in now, we definitely are going to get a bottom in pretty soon. In a couple of months. Maybe we get a rally now, a couple of months we go up, and then we come back down again to confirm the bottom. Okay, but we will confirm the bottom. I do not see, no matter what, this thing breaking out and going into all-time highs for another 50,000% gains. I just don't see it. Yeah, I really don't see it. I think it's going most definitely, and what happens every single time is that you bloody get rejected. Okay, around about the 618 area, which is 180, and the 702, which was the 210. Okay, let's see what it does then, because at that point it will definitely go and do this, which is going to be range bound, sort of. So this can be a deviation. Okay, right now you see, basically we make a rising wedge, price deviates, and then goes back up, okay, to this area, and then gets the liquidity, only to come back down and see where the bottom is. Now that would be absolutely perfect. Perfect. So that's, you take this, and then you go and apply it to all the other coins and pick the strongest ones. Okay. Alright guys, that is it. Oh Jesus, 42-minute video. I didn't think it was going to be that long. Alright, here's the market update for you, and a little bit of tutorial on how you want to read the coins. Okay, and just stay safe. Don't get liquidated. Don't use leverage, and don't just risk your money. Okay. Alright, and guys, remember, do like this video, give it a massive thumbs up, subscribe to the channel if you haven't already subscribed, share this video. Okay, so the more the content is out there, the more people get the info and less they get liquidated and lose their money. Because you gotta think a little bit as well. People lost money because they didn't get the right info. Okay, now those people lost money. Who made the money? The elites, the market makers. They made it, which means they're holding the liquidity. The retail buyers are not there with the funds. So the total 3 does not have the funds. So what will happen? Market makers are going to accumulate more. Okay, and then they will take your money, because there is no other retailers out there. There's only finite amount of money that anyone can hold, because then every single person makes $1 million a year. So think of it that way. Okay, and do share this info. It's only to help, and it's totally free. I mean, why the hell not? You know. So I appreciate your time, and stay tuned for the next videos coming out with price predictions and a few more tools and indicators that can be helpful for the next bull run, or for any asset that you want to trade in any other sectors. Okay, so it can be stocks, it can be commodities, ETFs, or whatever you want to trade. Okay, but these indicators are powerful. Go back and check the VRA tutorial I just posted. Okay, with the moving averages and all. I used only 2 indicators and just basically pointed out your entries, your exits. You still make 3,000% gains. Okay, so not financial advice. Okay, I'm not a licensed financial advisor, so please do your own research and study. Okay, study the coins, study the projects, the team behind it. Okay, and NTA. It's going to be very helpful. Alright, well, thank you guys for watching, and stay tuned, stay safe, stay blessed.